Hello again, Jesse from the Financial Toolbox in the beautiful Brickworks in downtown Toronto. Are your investments and even the markets standing in the way of a comfortable retirement for you? In fact, this is an interesting question that I'll introduce the asset allocation risk that'll face all of our portfolios. In my book, I discuss 13 different risks your portfolio faces, and asset allocation risk is one of the ones that I bump into more and more. In fact, let's discuss it. A lot of people tend to put their energy and focus into timing the market, but it is such an inconsistent thing. In fact, when I started in the industry, I was helping some senior brokers way down in the brokerage industry in Toronto, and no one was able to do it on a consistent basis. When to get in, when to get out of the markets. It was a very risky game, and in fact, if you don't get 4 things right, it could devastate your portfolio. And those 4 things are when to get in the markets, what to get in, then when to get out, and what to get out of. If one of those is wrong, it can devastate things. And unfortunately, no one will be able to predict where the markets are going to go, or the economy for that matters, and no advisor will be able to predict what the relative performance of an investment will be over the long term. It's one of these things, as soon as I realized that long ago, I began to focus on asset allocation. And let me introduce the value of that with the study that was done a while back. Back in the 70s and 80s, they had a study called the Brinson study, and they took a look at the top portfolio managers. They looked at the top 80 or 90 portfolio managers on a global basis. These are the guys who manage the billions of dollars. They've got analyst teams, they've got access to information and resources like you wouldn't believe. And in fact, when you own tens of millions of dollars of a particular company, you can get that CEO on the phone right away to get whatever question you want answered. It's a fascinating thing, the power of that kind of money and the influence that it has. So they looked at these portfolio managers and they asked them, what do you attribute the success that you have managing your portfolio? What are some of the factors? And when it comes down to it, market timing was less than 2% of the value that they receive on their performance. When it came down to stock selection, what did they pick? Coke or Pepsi, or which stock do they buy? That was less than 3% of the value of their performance. What was the largest value? Overwhelmingly, it was asset allocation. In fact, 94% of their success they attribute to a proper asset allocation model. And what is asset allocation? It really comes down to 4 things when it builds your portfolio. It comes down to how much stocks versus how much bonds you will have individually. Now, an interesting thing is you could have different portfolio mixes for each of your holdings. RSPs, non-registered, corporate accounts, husband and wife, each person will have often a very different asset allocation. So how much stocks and how much bonds is going to be the first thing to determine. Secondly, it's going to be the size of companies, whether you have small, medium, and large companies, and how much you have of each of these to keep it into a proper balance. I've seen a lot of portfolios without a proper capitalization factor, having everything in large companies, and they think they're having a reduced volatility, when in fact it's quite the opposite, because they only have it in one asset class. The third factor of asset allocation is foreign content. How much do you have in Canada? How much do you have in foreign countries? Would it surprise you to know that Canada still only has about 4% of global capitalization? That means 96% of all the global growth happens outside of our borders. Because of that, you need to participate in foreign content, but how much is right for you? That has to be determined. And lastly, growth versus value. There's a proper blend in terms of how much growth stocks and how much value stocks that you'll have in a proper portfolio. Once you have these 4 things done correctly, you'll reduce your volatility, you'll have better chances of proper financial success in your retirement, and a healthier portfolio. It's a tremendous thing. In fact, a proper asset allocation will represent 25% of whether you achieve your financial goals. That's a huge percentage, and it's because of asset allocation. So, I hope you learned something today with asset allocation. It represents one of the 13 risks that your portfolio faces. if you have any questions on that, if you haven't done an asset allocation for a while and you suspect it's out of whack, if you haven't done it ever, if you have questions on the suitability, anything around that, let me know. I'd be happy to sit down and we can see if there's any changes that need to be made so you're in an optimal portfolio. Go to my website, thefinancialtoolboxguru.com, and drop me an email from the website, and I'd be happy to sit down. We'll have a coffee and discuss things. Until then, enjoy the book. Jesse from the Financial Toolbox, signing off.